The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Also, take a look at Thursday's market trade action following the June WASDE report. Not a lot in the way of changes, and that is to be expected with a June report. But we're going to run through things and have a conversation about it. Joining us for market analysis, Brian Doherty with Total Farm Marketing. And Brian, always good to hear from you. And that June WASDE report, again, not a lot of changes, not any surprises that we're seeing from the USDA this month.
Boy, another sleeper, right? And you look at the way the market trades sometimes after these reports and it moves a little bit, and we're all forgetting just how jumpy things can be. So we're on one end of the spectrum where you get not much change to reports, not much volatility, what I'd call a good weather forecast for crop production in the 6 to 10 day outlook. But boy, yeah, carryouts, no change in June soybeans that I saw there, 350 for the 24, 25, 20, 25, 26, 295, no change there. Corn carryout, very little movement or change on the line items. Yeah, you'd call this neutral. Corn carryout for the year ahead. Looking at what 17 looks like 1750 ending stocks 25, 26. It's a little bit lower than May 18. So support there. World numbers a little bit supportive, but boy, not much of a reaction in the marketplace today. And I think, Jesse, that goes back to your 6 to 10 day forecast. Again, I think the market really pays attention. When I say the market, the big players, and they really pay attention to what is going on with the reports and the 6 to 10 day forecast. So nothing on the reports and a nice 6 to 10 day outlook that I think gets the crop to late June without any perceived issues.
One thing that did surprise me on the WASDE is that USDA made no changes to South American production. And you had CONAB earlier this week coming out with their estimates calling for, I think, the second largest second crop corn, safrita corn on record. And yet here's USDA making no changes. That one perplexed me just a little bit, Brian.
It perplexed me as well because of their private estimates have been kind of this has been in the works for several weeks. 2 to 3 weeks is when you started hearing some of the whispers even of 140 million metric tons, 130 million last month from USDA, and again this month. So right, that it looked like the trade was looking for 131.5, so a little bit of an increase, or maybe inch your way toward the bigger crops. So I don't know what that means, other than I still think there's got to be upward adjustments down the road unless something big happens here in the next month to really tell us otherwise. But we've heard good things from the crop down there. And it's a lot of times, Jesse, as you know, well know, it's what you don't hear when you're not hearing stories, or it's too hot or too dry. Things are pretty good. You got to expect that there'll be I don't know if it'll be a record crop, but it might be a record yield. Um, but it's a lot of production.
Well, one has to wonder, looking at these markets, the weather, there's not a weather story really. Trade issues, things of that nature are still out there and more. But by and large, it just doesn't feel like there is anything to get bullishly excited about in these grain markets. And I think that's got a fair amount of producers in the doldrums, maybe a little bit here when they look at these market prices. Brian, what do you think?
I think that's the word I was searching for earlier today when I was talking to a rather large producer, and we were actually doing a Teams call. And I said, farmers are feeling, and I used my hands and said, they're feeling this, whatever this is. They're just kind of blasé, doldrums, not high enough to take action, not low enough to, let's say, buy aggressively from an end user perspective. It's stuck. It's not unusual to see these trough of prices, and really corn's been at a trough. I just happen to be looking at the December contract for 2025. It's traded at $4.40 a bushel in 11 of the last 12 months. Only 1 month we were above that level, and that was in February. So when you kind of look big picture, Jesse, if it feels like things aren't moving fast and volatility is low, it's because volatility is low and things are not moving fast. It's a little early in the season to take weather premium out of price. Certainly, it's early enough in the season you could rapidly put, I'm going to say, more weather premium in. 440 December corn isn't lighting anybody's fire, but with increased acres, if in fact that yield number can stick up, there's probably 30, 40 cents of weather premium in that.
Thinking from a risk management standpoint, I mean, and I know something else I saw this week as well. A big processor in central Illinois cut soybean basis Wednesday, I believe, and they flipped to the November contract, and that caused some cash market moves here this week. It's just you think about things like this and look across the board right now, risk management wise. I'd say maybe it's a little bit of a mixed bag for producers, depending on their situation, whether they're looking at cash or futures or whatever it may be, Brian.
Well, they're looking at cash or futures or doing nothing, which
Yeah.
is kind of commonplace right now, which is a strategy and it's a decision, but it may be a wise decision at this point. However, as I've mentioned to you before, one of the things that I like to kind of think about from a growing season perspective, from a time of year perspective, is, and it goes back to like elementary school for me at least, where the teacher had the alphabet on the board, your A through Z, and it's up on the wall. And if you think about a calendar up on the wall, this calendar is continuing to move right along. So the ticker on the calendar is now into mid-June. And then if you think about, are the odds getting better that we're going to have a crop or less that we're going to have a crop of consequence? You'd have to say the odds are getting better today. So you can do nothing or you can do some things. Now, forward contracting isn't really, appealing. Hedging probably has some appeal because it's flexible. You're not married to it. You could enter today and exit tomorrow. But if things sold off, you could work with that. There's carry in the market. So one of the things that I would encourage producers to think about, in particular if they're going to store grain, is to think about, and I know it's a long ways out, but think about fence strategies on the March contract. 460, 456 board, buying a 450 put, selling some other type of call in March above $5, maybe above 520 to lighten the load on that and challenge the market to move higher. When I say lighten the load, bring premium into the account to help finance the put. So that's a beast of its own. Yet don't take my word for it. Make sure your advisor walks you through that and the pros and cons and what the risk could look like. But those are things I think you've got to be creative and you got to keep looking. It doesn't mean you have to execute, but keep looking, keep asking questions, keep thinking, well, how can I generate revenue streams? What can I do to improve my bottom line with reasonable or risk that makes sense for the operation?
Brian, how about over in the livestock sector? Let's talk about that a little bit. Kind of a mixed tone across cattle and hog futures on Thursday. Any big things standing out to you in the protein complex this week?
Yeah, the cutout values just continue to roar higher is what jumps out at me to just record levels and at a pace that just has never been seen before historically. So again, we saw cutout values higher today, but the board really didn't respond as much. So 37 higher on June cattle in the deferred months all were down something, with August down $1.07. So I'm wondering if the board this week isn't sort of taking its collective vote from all the participants and saying, let's just be cautious here. Cutouts can move higher this week. They can lose a lot next week, right? So maybe it's the last minute kind of shopping for retail for not only Father's Day but the 4th of July weekend, and it's just getting to be a high price that eventually shows up to the consumer, whether it's sooner than later or a little bit later, but those high prices are going to have to probably show up in the retail sector, which historically, I mean, it'd be an economic anomaly to see higher prices and higher demand, all else being equal.
Yeah, that's a great point, and we're waiting for it to show up in that retail side of the equation. How about the dairy markets this week? What are you tracking there?
Well, a lot of volatility, a lot of straight up, straight down, straight up, straight down. This week, straight down, right? So what we're tracking is a market that has some weakness in cheese, some strength in butter, some volatility in futures, and from a trading or trader's perspective, offering some opportunities. When I look at the charts, I see this big head and shoulders formation, and the charts left a gap on a, again, my language, inverted head and shoulders formation back in the end of April and screeched higher. And they're close to filling the gap. The gap in the July contract is 1792. Today's low, 1805. Now, okay, well, and say that's not much difference. 1805, we just came from 2028, 12 and 7. That's 28 to 2 weeks ago. So that's a big drop off. The point of it is volatility is high. Remember, you've got a real incentive to continue to hold cows back, heifers back, breed for beef. Got an excellent value coming in to the dairy operation with beef calves, commanding all-time high prices. So there's not an incentive right now to see the dairy market, especially with corn price where it's at in this slowly sideways trade, meal at near contract lows. There's not an incentive not to continue to put the hammer down and try and grow the herd. And so that's what I see in the dairy side. But I just want to circle back to cattle. One thing we didn't talk about, I talked about, high cutout values. We're getting used to these high prices and high market. As a marketer, someone who, manages margins and feedlots and things like that, you have the opportunity to get some things done to defend these prices. So make sure, again, have good conversations with the right questions for your advisor.
Absolutely. Brian, anything else final you would add or reiterate for folks this week?
Well, the one market we didn't touch on is new highs in the summer months on hogs continue to look real strong there. So that is reflective of the consumer probably starting to weigh their alternatives to beef. So watch that market real well. As far as the grains are concerned, make sure you're having those conversations with your advisor. Look at all, take a crowbar and pry up every stone or rock and look underneath there where the opportunities could be. Ask a lot of questions. And maybe there's nothing to do, or you may find that, hey, I didn't think of that. I didn't think about going out to March and defending this, maybe with buying a put and selling 2 calls to finance the put. So worst case scenario, prices drop out. I have a floor at no cost, or little cost. I don't want to make this sound too simple again. So just keep at it. Keep a sharp pencil. Keep the communication lines open. I wouldn't bury my head. I'm looking for opportunities.
Brian, if folks want to reach out to you for a conversation at Total Farm Marketing, what's the best way?
I think the best way is through a phone conversation, 800-334-9779, or shoot me an email, Brian with a Y, at totalfarmmarketing.com, Jesse, or totalfarmmarketing.com, not Jesse. or check out our website, totalfarmmarketing.com. A lot of great resources there. And my preference would be if you have questions, call. I can hear things a lot more than I can try and interpret in an email.
Always enjoy the conversation. Happy Father's Day to you, by the way. Brian Doherty, Total Farm Marketing. Thanks for being with us on Market Talk again this week. Appreciate it.
Same to you, Jesse. Happy Father's Day. We appreciate you and thank you for all you do. And have a great week.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.